Hi guys, welcome back. This is gonna be the summary of the ICT Mentorship 2023 of video number 2, Deep Learning on Nasdaq Futures Trade. Please refer to ICT original content. In this episode we are gonna see the Ph.D. level of price analysis, relative strength analysis, classification of fair value gaps. We're gonna dive deeper into BISI and SIBI, and finally a market review for the 3rd and 4th of January 2023. We are looking at the E-mini Nasdaq Futures 1-day time frame. So you can see here the last days of October, November, December, and then beginning of January. We see here in orange highlighted a big volume imbalance. But what is actually a volume imbalance? And why this one specifically is considered a volume imbalance by ICT? Allow me to zoom in. So here we see that the price levels in this orange area have been filled or closed only with the wicks, so not with the bodies of the candles. So guys, let me explain you with my words. That big bearish candle has created a fair value gap. And that fair value gap has been somehow partially closed, but it has been closed only by the wicks of the candles. And the bodies of the candles haven't really touched those orange area, those price levels. And so ICT consider that as a volume imbalance. Let's jump now into the 1-hour time frame. And as we look at the 1-hour time frame, we can see here again the orange box. That's still our volume imbalance. We are on the first week of January 2023, and ICT wants to highlight that we will be trading on an NFP week. NFP stands for non-farm payroll. It is a big news event which happens every first week of the month. Usually during the NFP week, we as ICT students would focus only on trading Monday, Tuesday and Wednesday for the New York session, so New York time frame. We would not be trading the other days of that specific week. So of the NFP week, we do not trade on Thursday and Friday. So again, on the 1-hour time frame, we can see that this orange area and the bottom level of it is the level that we are looking the price to reach. So we think or believe that the price will be attracted to that level and will be going towards it. The orange area is our higher time frame PD array or price delivery array. PD array stands simply for an organized order or sequence of how events should unfold that plays behind the scenes of the market. So remember, PD array, it simply means price delivery array, and it's an organized order or sequence of events of how the price should be moving. We can see that in the past hours, the price did not touch anymore the volume imbalance. ICT always looks for extreme precision, so he's waiting or expecting the price to move in a precise way. Now guys, let's dive deep into this first low here with the red circle, which will give us insights about the subsequent low that we can see here with the arrow. For traders that are outside the US, depending on the country, maybe we can't always use future contracts because we can't access the same market as US citizens. In that case, we can trade always the US 100 and the US 500. And remember guys, check to see if you have real-time data. For example, for Nasdaq on TradingView, it's an additional package that you need to purchase, and then you have real-time data for these futures. Remember always to research, double-check and do your own due diligence. Let's go back to our E-mini Nasdaq futures on the 15 minutes time frame. What can we observe here? The first thing that we can see here are the relative equal highs. Now, if we scroll back a little bit, so we go a little bit back in time, and what we see here is that we're going to be focusing on this area, and we will jump back into the 5 minutes chart so that we can observe it more precisely. Now we are on the 5 minute time frame, always for the E-mini Nasdaq futures, and we see the relative equal highs. We also can observe this low pointed here on January 4th at around 10 and 10 am New York local time. As always guys, remember to put your charts at the New York local time so that we are looking at the same map, we are looking at the same charts. If we scroll back a little bit, on January 3rd, 2023, we can see where the purple line originated. ICT highlights for us here this fair value gap, and he calls this fair value gap a BISI, buy-side imbalance, sell-side inefficiency. BISI, guys, is a type of fair value gap. This purple line here is our anchor, and we should look at it in relationship to the following low in price. So let me show you. So if we actually go forward to January 4th, we see that the price has touched very precisely that purple line. Now let's jump into the E-mini Nasdaq futures on the 1 minute time frame. On a 1 minute time frame, here we can see more precisely the price movements, and we're going to be analyzing them extensively. And again, if we scroll back to the 3rd of January 2023, this is our BISI, buy-side imbalance, sell-side inefficiency, and underneath it, the purple line. We are always on the 1 minute time frame, and we have scrolled back to the 4th of January 2023. And let me break it all down for us, one thing at a time. So, let's imagine that we do not know what will happen after 8:30 am in the morning, New York local time. This is because at 8:30 we would want to start trading, and so we need to know what we have to do before 8:30 am. So, looking at the levels here, we remember that we have our sell side and buy side liquidity, which are the two dotted lines. The orange area that we still see on top is our daily volume imbalance, or our fair value gap on a higher time frame. The green area on the bottom is our BISI on a higher time frame. So let's keep observing what happens after. The price starts consolidating a little bit, and then it goes below the sell side liquidity, which is our dotted line. Exactly at 9:30 am, the price has rallied down and taken down the sell side liquidity. But it didn't stop there. The price went back shortly without taking the buy side liquidity, which is our red line here, and then it started going down very fast. Already by 10 am, the price had rallied down again to tap into our buy side imbalance, sell side inefficiency, which is our green area. And that's the moment when the price actually hit that purple line level. If you remember from before, the purple line is our anchor. It is the top of the down closing candle right before our BISI. It's interesting, guys, because at this point we are really at a big discount, but the daily volume imbalance is actually much higher. That's the orange area, right? That's the area that we were expecting the price to be attracted to. We were actually expecting the price to touch the orange area on this specific day. But let's keep in mind that this is our NFP week, which in turn could mean that the price does not touch or fulfill our target. So we need to keep an open mind and see how the price behaves, if it actually gives us reason to think that it will go higher or not. Remember from the previous episode, we make hypotheses, but then we let the price tell the story. We do not try to force it, we really look at what's going on. So right now, the price is in a deep discount area. So we wait and see, but we still believe that it's likely to go higher. So we know that first the price has hit the purple line level, going down, going lower. And then what happened? As you can see here on the red circled area, the price consolidated. Look at this big red circle and at the price movements inside it. We will be focusing on this area here to understand what has happened there between 9:30 and 11 am New York local time on the 4th of January 2023. Guys, I have zoomed in here for us to be able to really see the price movements. And now let's start slowly to break them down. Let's start with the number 1. So first we have traded down into the BISI. Number 2, then the price has consolidated. Number 3, the price dove down another time into the BISI creating a short-term low. Number 4, the price has created a short-term high. And last, in number 5, which you can see on the bottom but also on top, the price has taken away both the levels of the short-term low and of the short-term high. So the price has broken those levels. When the price takes out both the short-term low and the short-term high so quickly, that is our sign that we are having a shift in market structure. And that shift in market structure has actually happened in an area of a heavy discount. And additionally to all of that, which would be already enough, between the number 5 on the bottom and the number 5 on the top, the price has formed a fair value gap, which is the area in blue. So guys, the price has taken away the short-term low from number 3 to number 5, went up, rallied up to take away the short-term high, which we see number 4, and by doing so has created a fair value gap. So guys, let me zoom out and go back to the previous chart. What happens after? Right after the price runs up, touching the previous fair value gap. What we want to see is the price staying above that green fair value gap as a confirmation that we'll keep going higher. Now something very interesting, guys. ICT now shows us that on the bottom of this chart he has opened another chart, which he tells us he uses as an indicator, but it's not really an indicator. He also tells us that that indicator is used by market makers. Allow me to show you how it looks like. So when ICT opens it, we can see here on the 1 minute time frame the E-mini Nasdaq futures and the ES 2023. So guys, ICT is comparing the Nasdaq with the S&P. He calls this comparison in this type of analysis a relative strength analysis. And we will see it now on how he actually does it. This type of analysis is about comparing highs and lows between the Nasdaq and the S&P. And in our case, they should be moving in the same direction. So Nasdaq and S&P, they should not be making similar highs and lows, but the relationship between highs and lows should be the same. And don't worry if things are a little bit confusing, we will see it in a moment with an example, so just keep watching. How do you actually add a comparison in TradingView? So to do exactly what ICT has done, you can click on this plus sign that you see on the top left of your screen and then type inside the indicator or the price movements that you want to see and then tap New Pane. For the traders that are outside the US, such as myself, if you are trading, for example, US 100, you can use as a comparison the CFD for the US 500. But guys, as always, do your own due diligence, backtest, see if things are actually working. Now that you have actually opened your graph, you should go on the settings little roundy thingy. You can see it here on the left bottom side of this screenshot with a red circle, and then be sure to select style and candles. So usually ICT tells us that there are lines, but we should be selecting candles. Now, once we are ready, we should be seeing something like this. On the top, we're going to have the E-mini Nasdaq 100 futures for the contract of March 2023. And on the bottom, we're going to see the ESH 2023. These two charts should have lows and highs that are aligned in time. But it's up to us to see if it's actually true. And the easiest way to have it done, to have a comparison, is to put a vertical line, place it on a high or on a low, and see if the two indexes match. Now look at this beautiful red vertical line. That line shows us the low, and it is a line between the two charts. So you see a low on the Nasdaq and a low on the S&P. Now let's slowly start moving the line towards our right and see if the other highs and lows are aligned. We move the vertical red line, and what we can see on the Nasdaq is that we have two highs and the second high is higher. What can we see on the ES? Well, we observe here that the second high is slightly higher than the first high. And so what we can deduct from it is that the ES is not really showing the strength of the high that we see on the Nasdaq. So the Nasdaq has a higher high. Now we keep moving the red line, and we are gonna look at the highs before and after the red line. On the Nasdaq, we can see that we have a higher high and then a high that's a little bit lower. What about on the bottom? Here we can see a lower high and a higher high. This is interesting, but it doesn't mean anything concrete yet. This is just a discrepancy, but we see still two highs on both sides of the red line. And it's something that kind of like rings a bell for us, but it doesn't give us a specific meaning yet. We keep moving the red line, and what do we see here? On the top, we see a lower high and a higher high and a fair value gap being formed. And on the bottom, what we actually can observe is two relative equal highs. So guys, let me remind you just quickly. ICT is comparing the Nasdaq with the ES. He calls it a relative strength analysis. What we are doing is comparing highs and lows between Nasdaq and ES. And in our very specific case, they should be moving in the same direction. They should not be making similar highs and lows, but the relationship between highs and lows should be the same. So the sequence, guys, what is happening first, what is happening after. Okay, now going back to what we have seen just before. The Nasdaq was a much better trade because the movement of the price is more prominent, is stronger. We are looking for the strength leader, the index that wants to break faster, stronger, and we actually want the more sharper technical picture. The Nasdaq in this case has a higher relative strength. Now guys, let's go back to the Nasdaq. This first fair value gap here, that's indicated with the black arrow, is actually a getaway fair value gap. And why, you will ask? Because it has already touched the BISI and we had our shift in market structure and the price wants to get away from it. Let's focus now on the fair value gap that we see here in green. The fair value gap started when you see the number 1. When you see number 2 happening, the price came back, touched upon that level and went above it. So this green level, this green fair value gap, becomes now a balanced price range. And that's the reason why after the price goes above it, we should not expect the price to go lower. We look here from the bottom. So we have seen that the first fair value gap with the first arrow from the bottom is a getaway gap. What we haven't seen yet is that the second fair value gap, highlighted here in blue with the black arrow, is a measuring gap, and we will not expect it to be filled. But actually, why and what does it mean that it's a measuring gap? ICT tells us that from here, so from the bottom, from the first fair value gap, which is our getaway gap, to here, which is our measuring gap, if we go from the bottom fair value gap to the top fair value gap, that's gonna be half of the total move of the price. And so if from here until there is half of the total move, we can just double it and see that the price touches exactly the level that ICT is telling us that it will touch. Precision is incredible. It always blows my mind, guys. Okay, now we have actually finished examining these whole price movements, and I just want to give you a recap. ICT in this episode talks about fair value gaps, and he tells us that there are different types of fair value gaps. There is the BISI, the SIBI, there is the measuring fair value gap, the getaway fair value gap, and then there are liquidity voids. At around minute 40, ICT shows us his trade on this exact day, and he breaks down for us the price movements once again. Feel free to go back and rewatch it. Guys, do not give up. Let's keep going. This is the way. Where focus goes, energy flows.